Welcome. Today, let's talk about one of the biggest financial mountains most of us will ever have to climb, the home loan. I mean, it can feel like this endless marathon, right? But what if you could actually turn it into a sprint, or at least a much, much shorter race? Well, that's exactly what we're going to figure out how to do.
I want to start with a number, a pretty shocking number actually, 64 lakh rupees. Just let that sink in for a second. Now the big question is, what on earth is that? So that number, that's the total amount of interest you could end up paying on a pretty standard 50 lakh loan over 20 years. Think about that for a second. You borrowed 50 lakh, but you could pay back an extra 64 lakh on top of it. It's no wonder it feels like a trap you just can't get out of. But is there really a way out? You bet there is. And that's exactly what we're going to break down right now. There are some really smart, totally doable ways to break free from this debt cycle way, way earlier than you think. Okay, first things first. Let's really get into it and understand what we're actually up against. Where is all of that money going? So take a look at this. This chart shows what's really going on with your monthly EMI. And here's the crazy part. For the first, say, 5 to 7 years of your loan, almost everything you pay goes straight to interest. You're barely making a dent in the actual loan amount, the principal. It's kind of like you're just renting money from the bank.
All right, so knowing that, why should you even think about prepaying your loan? Well, the motivation becomes super clear when we look at the huge upside.
And this is where it gets really interesting. Just look at the difference here. By paying off your loan just 8 years sooner, we're talking about saving tens of lakhs of rupees in interest. I mean, that's life-changing money. That could be a new car, your kids' education, you name it. And you know, it's not just about the money. Not at all. It's about getting rid of that constant financial stress that hangs over your head. It's about freeing up your cash for other things you actually care about. And it's about getting to that feeling of true home ownership faster. It's really about buying back your financial freedom and your peace of mind. All right, so we get the why. It's a no-brainer. Now, let's talk about the how. What are the best ways to actually make this happen? So, you've basically got two main weapons to choose from. First, there's the steady approach. Just increase your monthly EMI a little bit. It's disciplined, it's automated, you set it and forget it. Then there's the high-impact strike, making a big lump sum payment whenever you get a bonus or some extra cash. This one is more flexible, but yeah, it takes some discipline not to spend that money somewhere else. And making one of those lump sum payments is actually pretty simple. This slide lays out the 5 steps, but I want to call out the most important one. It's number 3. When you transfer that money, you have to tell your bank to apply it directly to the principal. If you don't, they might just count it as an advance for your next few EMIs, which totally defeats the purpose. Okay, hold on. Before you get all excited and run off to the bank, there are a few really important things to think about to make sure this is the right move for you right now. First, let's quickly talk about something called opportunity cost. It sounds fancy, but it's a really simple idea. Every single rupee you use to prepay your loan is a rupee you can't use for something else, like investing it. It's all about weighing what you gain versus what you might be missing out on. And this is the big choice it all comes down to. Prepaying your loan, that gives you a guaranteed, totally risk-free return that's equal to your interest rate. So if your loan is at 8%, you're making a guaranteed 8% on your money. Investing, on the other hand, gives you the potential for higher returns, but it always, always comes with risk. What's right for you? Well, that really depends on how you feel about risk. And here are a few final but critical checkpoints. First, check your loan agreement for any sneaky prepayment penalties. Next, and listen, this one is non-negotiable. Make sure you have a solid emergency fund set aside. Never, ever touch your safety net. Also, think about the tax benefits you might lose. And finally, just ask yourself, how does this goal fit in with everything else you want to do with your money? All right, let's pull all of this together. We've weighed the pros and the cons, we've looked at the strategies. So what does your personal path to freedom actually look like? Okay, here it is. This is your roadmap, your game plan. First, figure out exactly how much interest you're on the hook for. Then, look at your budget and see what's actually possible. Pick your strategy. Steady EMI or big lump sums. Weigh that opportunity cost we talked about. And finally, just talk to your bank. Following these steps is how you take back control. So we've seen the insane cost of just waiting, the incredible benefits of taking action, and the exact strategies you can use to do it. The path to freedom from your home loan is right there in front of you. So the only question left is the one on your screen. What is the very first step you're going to take?